Good morning, everybody. It's the 6th of May. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Steve O'Hare and Jamie Pakenham-Walsh. Good morning, gentlemen. How are we doing?
Good morning, mate. Very good, thank you.
Morning, yeah, all good, thank you.
Made it to the end of the week. A short
Another week. Another day, another dollar.
Indeed. Pretty wild stuff yesterday. Some dramatic reversals on stock indices, which we'll come on to in a moment, but also some big moves in the currency space too. So let's get stuck straight into the latest headlines. I'll bring those up on the screen now. So yesterday was all about the Bank of England, really. They were set to hike rates by 25 basis points, which they did. That was very much in line with the consensus forecast. However, there was a split, 6-3 split for the decision for a larger 50 basis point increase. So there were murmurs that could occur. Obviously, they staved it off initially, but we are talking about, I think, potential for more interest rate hikes at later meetings throughout the year. The monetary policy stated they believe inflation was expected to peak at just above 10% later this year, which of course would put further strain on the cost of living. As a result of the action from the Bank of England yesterday, we saw sterling take a fairly dramatic tumble. Although the actual decision rate was slightly more hawkish than expected, growing divisions within the committee and a notable downbeat stance from the bank undermined confidence. Forecasts of GDP contraction in 2023 and an inevitable surge in recession talks were crucial factors in undermining sterling. We saw the US bond yield surge again after a limited decline following Chair Powell's comments on Wednesday. The US yields moved sharply higher on Thursday. The 10-year yield increased to highs of 3.1%, which is its highest level since early December 2018, amid fears over increased inflation pressures. We saw Wall Street collapse yesterday following a bit of a boost following Jerome Powell's speech on Wednesday. But we came under sustained selling pressure yesterday, a very quick reversal, triggering a sharp sell-off. Markets were unsettled by the increase in yields and fears over tightening of financial conditions in the US and global economy. The Nasdaq posted a 5% decline on the day, testing 17-month lows. We saw fresh highs on the US dollar that surged to a fresh 20-year high on the back of the risk-off move yesterday. So there is plenty for us to chat about today on the chart side of things. Steve, would you mind kicking us off with the markets that you're looking at today?
Yeah, sure. Obviously, just shows you what sort of that the cryptocurrency assets aren't a sort of individual asset on their own. They've just followed the indices yesterday. We
Share
can
your
see.
screen, mate.
Yeah, of course, mate. We can see that we broke out of this. This is the weekly chart, so we're breaking out of this corrective channel to the downside, which we've been talking about for a while now. This has been a formation on the horizon for about 3 or 4 weeks, and a really decent break through it. It's taken out a lot of good support and formed a bullish engulfing candle yesterday. And this is on a daily chart, and you can see just how aggressive this has been. We've got a downward trending resistance line coming in. We now find that the resistance above is around about 40,000. Support, we've just bounced off 35,646. Below there, we've got 34,300 and 33,000. Before the big level, 28,800. Feels like we're going to head down there. If we get a continuation in this indices sell-off, then I wouldn't be surprised to see this next week. So looking at going from the cryptos, we're going to dive into commodities, take a look at how gold reacted. Now, gold was looking a little bit more positive yesterday. We saw a rally eventually up to 1910, just stalled in front of the 1915 resistance, then turned around. That's on the daily chart, formed a bit of a shooting star candle. Normally, you like to see them at the top of a range, like this one up here. But when they happen into range, they seem to have a similar sort of effect. You see another shooting star here, and that you can see the effect that this has had, a really decent sell-off on the day. So not looking too positive for gold either. And with that dollar strength, we could quite easily see that capitulate lower again. On maybe looking forward to try and see where support is on the shorter term chart, the 4-hour chart. 1850 is the level to target on the downside. Up above, as I say, 1910, 1920, the resistance levels. On oil, oil's continued the move higher. This inverse head and shoulders that we picked up, again, it's not ideal. It's not at the bottom of the range, but it was a classic formation. This had a downward sloping neckline, so not quite as aggressive as an upward sloping neckline would have been, but nevertheless, it hit its measured move target yesterday, which was around about the 110.30, hit it sort of bang on. So a nice little pullback for oil. So levels to watch really in oil now. You've got mild support around about 105.50, resistance at 110.37, and that should open up an assault on 115.85, and above that the multi-year high at 126.34. All-time high in that is around about 150. So watch out for that as well.
Nice. Thanks, Steve. Okay, there was lots happening in the FX and indices space yesterday, so let's have a quick look at some of those. Dollar index is the starting point. We saw a fairly swift reversal on that following the retreat that was created off the back of the Jerome Powell chat and the Federal Reserve policy decision on Wednesday. We reversed all of that yesterday, and we are now making new highs. So this is the highest level we've been in over 20 years. We've taken out resistance at 103.82. The next level above, we've got around here at 104.53. And I'm not sure there's many people backing against that. That's a 61.8% Fibonacci extension of this double bottom pattern that played out many months ago now. So still looking exceptionally strong and showing no signs of slowing. If we take a look at Euro US dollar, we can see the reversal there. On the flip side of what we've just looked at on the dollar index chart, we gave up all of the gains that we posted on Wednesday, and we aren't quite at new lows, but look set to challenge those at 104.70. So maybe we may see a reaction if we get a break there and a further continuation lower. Sterling got absolutely smashed yesterday as well. That looks really horrible. We were talking about this being a bearish flag. Steve actually mentioned that too, and he's gone to the head trade, but due to the volatility, I think that didn't play out as we thought it would. But I mean, look at that breakdown there, and it's continuing lower again today, down by 0.5% as things stand, and pretty much underperforming everything else. One other thing I liked the looks of on the currency side of things was the potential for this pattern playing out on euro sterling. An inverse head and shoulders pattern looks to have formed on the daily chart. We've got a left shoulder here, a head here, and a right shoulder here. We've taken out that high, which I'm calling the neckline, at 85.12. We're holding above it, and there is potential for higher prices, I think, on that one. We've got a measured move up here at 88.23. So maybe we are going to see a bout of euro strength versus sterling, or maybe just down to sterling weakness rather than anything else. Some pretty dramatic reversals on anything linked to US dollar yesterday. Look at the Aussie. We can see that reversed all of the gains that we posted on Wednesday. It's a similar situation on the New Zealand dollar too, although that's now looking as though it's trying to make new lows. So anything US dollar related, we're looking as though we're expecting more strength there, I think, from the US dollar. So on the indices, pretty dramatic stuff there too. None more so than the Nasdaq, which reversed all the gains that it made on Wednesday, and again touched this key low that we posted at 12.711. So we posted that on the 2nd of May, and we retested it again pretty much to the tick yesterday. So it's struggling here. If we break this, then I think we're looking for a continuation lower on Nasdaq, and it looks to me like we've got a big rounded top that's taken shape here, and I can't see that reversing anytime soon. So looking for lower prices on that. If we look at the S&P 500, that has still managed to hold above the support line here at 41.06. We haven't retested these lows that we posted on the 2nd of May, but given the strength and the power of that reversal candle yesterday, I wouldn't be backing against it. Again, looks as though we're forming a large top here on that. If we take a look at FTSE finally, that is holding up well compared to everything else, given the strength that it's got in oil and mining in particular. So not as dramatic on the reversal, still remaining at quite elevated levels overall, but I still think while it's below this 76, 78 level, there is potential for lower prices. Going to finish off with the DAX that rallied into this downtrend resistance line, posted a bearish engulfing yesterday and failed at the resistance line. So again, looking for lower prices there and expecting that to remain under pressure. That's it from me. Jamie, what have you got on these stocks?
Thanks very much, Joe. Yeah, stocks were, this tells a story, doesn't it? All this red you can see here. If I showed you this day before, it would have all been green. So it's been a bit of a wild ride recently in stocks and certainly really difficult trading conditions. So make sure you're all being careful out there if you are trading. We'll start with the biggest gainer and loser though today. And our biggest gainer is this Hudson Technologies, which looks like it had a good earnings report. It gapped up 26.89%. Happy days there. What I wanted to highlight, and I'll highlight it with the biggest loser as well, which was a gap down on earnings, down 25.68%, and that was Wayfair. It has a W for a ticker, I think slightly more of an L at the moment. But what you can see here is the price action going into earnings, and I think while that may not happen every single time, I think the writing's kind of on the wall for a stock like this. So this is just the price action before we got to earnings. And we're in this very obvious downtrend. So it doesn't shock me that the earnings were bad. And equally Hudson Technologies, we're in an uptrend. So I don't know. I think as a general rule, going into earnings, certainly be careful, but especially if the stock you like is in a downtrend, I think that's time to be extra cautious coming into earnings. We'll jump into some of the more well-known stocks now, and it's kind of a case of where do we start? It's just red across the board. We'll start with Etsy. Etsy was down 16.83% of the day, actually completing one of our ideas we'd posted online. Again, this was an earnings, a similar kind of thing I've been talking about. We're in this very clear downtrend from highs in November of almost, what are we up to there? $300, and now it's all the way down to 90. So quite a steep fall there for Etsy. This is the kind of same kind of thing across the board. Neo, which we look at a fair bit, down 15% on the day. Shopify had earnings as well, and that gap down 14.9%. So a lot of these stocks are looking really sick, and there's not a lot that looks good about them for now. Even some of the real main ones are at key levels and are struggling to hold. We'll go into Coinbase. We touched on how the crypto struggled yesterday. Coinbase was down 12.22%. Earnings coming up on 10th of May, and given what we've just been talking about with price action going into earnings, I wouldn't be hanging much hope on this being a great success, but we will see. What else should we take a quick look at? We got Palantir. We looked at that yesterday, but this is a key support level again. Earnings coming up on the 9th, so next week. Tilray at key support as well. So these are some of the slightly small stocks, but I wanted to take a look at, where are we? We'll have a quick look at AMC. That's coming into a key support level here. This previous resistance now becomes support at this kind of $14 level. A lot of key levels. Nike key level, 50% retracement from the COVID lows to the all-time highs. It's been tested once before. We'll see how it holds up this time. But we look at the big boys. We look at Microsoft. Microsoft has come back to this key support. It's been tested a few times now. And I don't know. I think it was last week I mentioned how when we get to these key supports, I want to see like a strong rally to think, okay, that's the bulls are regaining control here. But we had this touch back at the back end of April. We initially rallied a bit. We had earnings, which was a positive day for the stock. And now we've been kind of drifting. We're drifting back down. So is this a larger head and shoulders top pattern we've got playing out here? It looks to be that way. We'd want to see a break of this kind of 270 level to confirm that. But a couple of key trading sessions for Microsoft ahead, I think. We looked at Lyft yesterday. That was one of the only green stocks, but that was because it was down about 40% the day before. So I'm not too excited about that. What we have here is NatWest. NatWest gap below this key support. Looks set to take a move back down to this second support level we've got marked here at about 490. I again, like I say, there's nothing that looks good right now at all. And I think that is kind of highlighting the indices. What you're saying, Joe, we're at this key support level, and if it doesn't hold, I think there's room to move sharply lower. We'll finish off on S4 Capital, and this is actually a level I had marked out yesterday, but it hit this resistance perfectly in the open this morning, and it is kind of seems to be drifting a bit lower from there. And given the price action of this again, we're in this downtrend. This looks to be a consolidation. And I wouldn't be surprised if we do get a break below this 290 level and see a move even lower from there. So not a lot to like about the stocks today. I think this is quite an important Friday. It's a key close. And yeah, I think it will determine a lot going forward. I think some of the weekly closes, which we haven't actually had a look at, we'll probably have a look at next week, could really dictate where price goes from here. But yeah, not a lot to like on the stocks today, but we'll leave it there for now.
Nice one, Jamie. Indeed, it does look a little bit scary out there. So let's have a look now at the challenge that we participate in each day, which we labeled gun to the head trade. So effectively we have to make a call live on the video without much time to execute or finesse these ideas. We just have to go for it. Each idea must have a stop and a target with a risk reward ratio in excess of 2 to 1. We place these ideas at market, and the trade ideas will expire at 9 p.m. UK time or when the stop or the target is hit. And we publish these to our TradingView profile, which anybody can check out. It's a public thing, and you can see how our trade ideas have gone. Yesterday we had 3 ideas as usual, and just bring up the spreadsheet. We had an idea on dollar index and cable, which were both stopped out. Steve, you were desperately unlucky on your one. I think it was just a couple of ticks.
Yeah, does that count?
No, sadly not. We can have a look at it actually on our profile, shall we?
Yeah, let's go through the pain of it, shall we, Joe?
Yeah, sorry, mate.
That's all right. No, I was about to say that. Why don't you make me suffer even more?
Okay.
Hopefully you can't get your thing working, so that
doesn't look like it, does it? Look like a
chart
amateur here. Okay, Steve's gone to the head trade idea yesterday. Selling cable. Got off to a nice start, and then wallop.
See, that looks like a hit target to me.
It does look like that, yeah. But if we zoom in, there's a tiny.
Actually, my order was stop if bid, not just like stop if the offer price is there. So I think I'll have to have a steward's inquiry about that. But yeah, I saw that yesterday.
If anyone followed it and they managed to stay in the trade, let us know. Then we'll count it as a winner for sure. So the other trade that we did was on the Nasdaq, which worked out like a dream. So this was trading in a range. We sold it around those levels there. The actual entry was listed here, 13,425, and it just went lower and lower and lower and lower, and actually
hit target.
The target.
Are you sure?
Yeah. It's one of those tiny little ones like you got there. Look, pretty much nailed that one.
Yeah, absolutely. Well done on that.
And tailed.
Great job.
Yeah, I don't mind that because I risked 1% and you gained
4.12.
Well, there you go. What a team!
Absolutely, team effort. So yeah, really nice stuff. So we got to pick some new trades today. Who wants to go first?
Absolutely not.
I think the thing I sort of noticed about Jamie when he was running through the stocks, I mean, you see a lot of stocks losing 15 up to 20% on the day, and the index itself, actually the index has only moved down. They got down to, I think Nasdaq got down about 6% down at one point. It probably had a stop. They have an intraday limit down or limit up area of about 5%. They really focus on the limit down side of things. For me, it looks like these indices are going to continue lower, but it is a Friday, so I wouldn't be surprised to get a little bit of profit taking. But for the markets I was looking at, I really sort of like think gold has a bit more potential, especially if it breaks down below this 1872 level. So this is an opportunity in my eyes for a bit of short-term risk reward trade idea, especially as we've seen that we talked about these shooting star candles. The follow through from the shooting star candle is normally pretty interesting, pretty negative. So I'm going to go and look at the short-term chart again. And say that looks a bit like a bearish flag. It's not a classic one. I'm not going to get my tools out to draw it to make it look better. But yeah, I sort of think got a good potential to hit this 1850 level. That can tighten the stop right out to something like that. So I can sort of like look for about a 4.5 to 1 risk reward on the. Let's just get in a little bit lower to try and sort of like. There we go. 1851 the target. So I'm looking to sell. Oh, hold on. My level has moved. So what's my stop on this? My stop is only about $6. Fair enough. So
you're making it up as you go along.
Yeah, exactly. I'm looking to sell gold XAU USD at 1876, targeting a move to 1852 with a stop at 1882. Now that's a pretty tight stop. It's only $6 stop. This will obviously be predominantly driven by the dollar price action, which is looking pretty leery at the moment. So that looks like dollar positivity is going to continue. This will impact negatively on the gold price. So I'm going for it. It's a very tight stop. You know, I like to fly close to the wind.
Indeed. Good luck, Stevie. Jamie, did that give you enough time to find an idea?
Yeah, I've got something I can go with here. I'm looking at the EU 50 here, so 50 EU stocks, and we had this move to the downside. Oh, can I draw this up? I reckon I can't. We had this move to the downside here. We've had this consolidation pattern, and it looks like we're breaking lower than that. So we're going to look to sell this further. I'm going to be quite aggressive with my stop. This is quite aggressive, isn't it? But we'll go with it because when these work, they hit nicely. So we will run with this. I'm going to attempt to sell this at 3652. And look for a move lower. What can we target here? We've got these lows down here. Let's bring this out to daily quickly. Yeah, it's quite a bold play, but if it plays off, it would be quite nice. So we'll look to target 3439 here, which is this previous swing low down here. We'll keep the stop nice and tight, just above the high of this candle, or the high of this kind of consolidation here at 3689. And if this does play out, we'll have a nice 5.76R risk reward. So, yeah, we'll have a crack at that today.
Nice. Best of luck. Okay, my turn. I'm going to look at sterling New Zealand dollar. So just ready to put this up on TradingView. Mixed bag on this particular pair at the minute, quite range bound, but sterling got a bit of a kick in over the last few days or so. We saw a big reversal over the last hour between 7 and 8 a.m. this morning, but then we saw a little bit of a retracement higher into some resistance here. So I've lost a bit there by all that waffling. So I'm going to sell it now at 1.9213. My stop loss, I'm going to tighten up a little bit just to make the risk reward a little better, is now at 1.9272. And I'm going to target a move back down to these swing lows here, which is today at 1.9040, giving me 3 to 1 risk reward on that one. Let's see how they go, shall we?
Nice. Yeah, good luck.
Lovely.
Okay, day ahead. We've got the non-farm payroll report out at 1:30 today. Generally a big deal when it comes to market events, can create a lot of volatility. So if you have any exposure to the US dollar, I mean, not just US dollar, but anything really can be caught up in this, then please do be careful. We've also got the Canadian employment report at the same time. So that could be a pretty volatile end to what's been a pretty volatile week, all in all. So do be careful today, guys, and make sure you're using appropriate risk management. Guys, anything to add before we wrap it up for another week?
No, all good. Have a good weekend.
I'm happy with that.
Cool. Have a good one, everyone, and see you next week.